Good morning, good afternoon, good evening. Welcome to our webinar today. We're just waiting for everyone to get in the room. Welcome. Hello, good evening, good morning, good afternoon. Good time, whatever time of the day it is where you are. Welcome to our meeting today. We have more than 50 registrants today, and we will just give it a moment for everyone to enter the room. Welcome, good afternoon, good evening. Welcome to our webinar today. We're just waiting for everyone to enter the room. Wonderful. Welcome to our webinar on business development, a journey to customer satisfaction. The event is sponsored by Triple Jump Advisory Services and delivered to you by Inspiring Development. We are a management services provider and MSME banking consultant. My name is Carmen Geil. I am your moderator for today. The event today will last 1 hour and 45 minutes in total, while the first hour and 15 minutes are dedicated to presentations. The last 30 minutes are there for your questions. You have throughout the presentation the possibility to ask questions in writing, either anonymous or stating your name. You can do that via the Q&A button in the bottom of your screen. If you are on a phone or a tablet, you may have to access that one via the more, the 3 dots button, Q&A, and you can write your question at any time throughout the webinar. We will make sure we get to them, hopefully all, at the end of today's event. So ask your questions as they arise. We will be very happy to answer them. Mostly the presenters will be answering them. We are also recording today's webinar in case you would like to revisit the content, or if you would like to share it with someone else in your team. You will receive a link via email within the next 48 hours, where you can download the video itself and share it further, and the presentation that we're showing you today on screen. So you will have that all via a Zoom email with a link for the download to happen. Upon leaving the webinar, if you drop out or when you leave at the end, we'd like to ask you to take a few minutes. It's really only a few minutes to help us with the survey. The survey is really useful to us because it tells us what is of interest to you. How did we do today? What can we improve? That is also interesting. And more so, what other topics are actually really relevant, really of interest to you in terms of microfinance, post-COVID, the new reality we live in. So do please take those few moments to answer the survey. Also, throughout the webinar, we have a little engagement because it is very, very interesting to see who is here with us and what is going on in the other institutions. We will be using a system of engagement, Mentimeter. Most of you probably are familiar with it. You can access Menti in order to participate via menti.com. And when you go there, it will ask you for the code of the meeting where you'd like to participate. And there, please enter 98680233, which is the unique code for today's meeting. So it's from your phone, your laptop, anywhere to get on the internet. Menti.com is the website. There is also an app. If you have that on your phone, download it. Menti.com, the code is 98680233. Menti is entirely anonymous. So like here, the first question, where are you calling from today? Simply type the country you're calling from and you will see it appear on the screen. This way we can interact a little bit live and have some information of where is this group in terms of this question. The presenters will have a few questions around the topic as well that are of interest, of course, to see, well, how are other institutions faring on this topic? So the page is menti.com. It's entirely anonymous. We have no idea of knowing who answers what, so you rest assured that nobody will know what you answered, but it will be interesting. All we see is the big picture on screen. So, most welcome to Myanmar today, to Albania, to Indonesia, to the Philippines, to Pakistan, to all our participants joining us from these countries. The website, if you haven't found it, is menti.com. And the code is the code that is shown at the top of the screen. So please, while we know that practice is really useful, we also have a second question for you to have a bit of a feeling who's here today. Are you representing a microfinance institution, a deposit-taking microfinance institution, a bank, or another type of institution? So just select the one you have and submit, whichever way you have chosen to access Menti, and keep this application open. If it's on your phone, your computer, keep it open throughout. There will be a few more questions. And we're seeing that today we have only microfinance institutions represented here, so no banks and no other kinds of institutions so far. And maybe a few more are coming. So we encourage you to participate on menti.com to see a little bit of a live picture of what the situation is in the different countries that are in. And most welcome to our meeting today. So it is about time we go back to our presentation and start out. First off, I'm sorry. First off, we have a little bit of a content overview. Introduction and practical aspects is what we're doing right now. Customer service versus customer experience. That's the first question we will actually try to answer for you. Not a definition, but what is the difference? To point that out a little bit, because things have changed recently. We will talk about technology. We will also talk about the role of employees, because they're a huge part of our business, of course. And then we talk, how do you know, are my customers happy? Are they satisfied? And then, as usual, we have a short summary, and then we go to the 30-minute Q&A session. So the Q&A session, don't forget, there's the Q&A button in the bottom of the screen. If you do have questions, please put them there. We will get to them throughout this last session. So your presenters for today will be Katie Bourdouly, Senior Banker with Inspiring Development, who has run her career throughout microfinance, from a loan officer all the way through to Chief Operating Officer in a microfinance MSME, and then later MSME bank. She's worked in a variety of institutions, but always about lending, business development, client relationships. So she has great insight in terms of how customer satisfaction can work and what is important. Together with Katie, you will also probably might know him already, might have met him before in a webinar. We have Asmus Rothner here with us. He's our manager for banking for MSMEs. And he has many years of strategic experience in the banking sector, on executive level especially, and also has a very fine eye for client relationships. So I will invite Asmus to start so we can get on with the presentations, and I wish you a really wonderful webinar. So here comes Asmus.
Thank you, Carmen, and a very warm welcome from my side to everyone. I'm Asmus Rothner, one of your two presenters today, one of your hosts today. So if you've been in our webinars in the past, and I think many of you have been, you've seen a lot of talk about efficiency and implementation of new technologies that can drive efficiency forward. In those webinars, we typically looked at the process from the point of view of a financial institution, inside out. So we looked at the credit organization as a factory that supplies financial services to its clients. Now, in today's webinar, we want to take the opposite view. We want to look outside in from the point of view of the client. Why? Because these technologies that we are talking about and the efficiency improvements, they for sure benefit the shareholders by improving your financial results. And we usually say they can also significantly improve customer service. But in fact, that doesn't always happen. This webinar is about the journey towards customer satisfaction. How can you make your clients happy while at the same time not forsaking all of the efficiency gains that you would like to achieve? Because the financial institutions that manages to keep its clients happy that is the financial institution that will have a long-term sustainable business. Let's go to the next slide and have a look at how customer service has been changing over time. So traditionally, working with financial services meant that the customer has one point of contact. For example, it could be your loan officer. To get your services, you usually would go to the branch, visit it, or maybe you had the phone number of your loan officer and you could call him or her directly. This was good and bad at the same time. Visiting the branch can be pretty time consuming, but the ability to have one direct contact who knows you was definitely an advantage from the customer point of view. For the MFI, from the point of view of the MFI, this process is labor intensive and staff costs money. So there's a lot of pressure to come up with cost saving solutions. But for both parties, there was a relationship, and this relationship was valuable. And it was a personal relationship between the client and the loan officer, for example. Your loan officer knew you well and would try to help you. Maybe you didn't always have all the documents in place or something, but he knew that you were going to repay, so he helped to get you through the process and to keep you happy and satisfied. And for the MFI, that meant your relationship enabled a kind of customer loyalty. It was what tied the customer to the organization. So let's look at how that has started to change. So because of financial institutions driving towards becoming more profitable, increasing efficiency, they introduced KPIs, they reduced staff numbers or had the same staff numbers trying to serve a larger number of clients. And this happened both in the front office, so with cashiers and client advisors, and certainly also with loan officers. The result of this was increased efficiency as measured by the KPIs that the institution set for itself. So you might have, let's say the bank's KPI says we have increased efficiency to 150 customers per staff member. That's great. We met our objectives. We increased our KPIs. That's what we wanted to. But what does it look like from the client's perspective? In this situation, it might be that the client had to wait for 30 minutes to see a client advisor. If you've ever had to go to the bank yourself and you've had to wait for half an hour or an hour to get service in the bank, then you know this problem personally. So efficiency from the financial institution point of view means that there is no waiting time of the employee. The employee doesn't sit idle and wait for the next customer to come in. The employee is always busy. But from the client perspective, the KPI, if you wish, meant not having to wait for the client advisor. And that waiting time of the client was not counted in the bank's KPI. So in terms of customer service, it's not all about reducing the possibilities and reducing the staff. There's a lot of new opportunities available. And this is both for banks, for MFIs, for deposit-taking MFIs. Through the new technology, we get more possibilities than before, and the client is in the center of all of this. Here on the slide, we have a few examples of what that might be. It might be an ATM to get cash from, it might be a wallet to make small transfers, utility payments, etc. It might be a kind of m-banking application on your phone to send off applications, see your loan schedule, whatever it is. It might be internet banking to make money transfers, etc. And it can, of course, be the call center. We have the red phone here on the slide. In most cases, this means you get better and faster service than you got before. So now with the ATM, you can get cash in the middle of the night, you can make a money transfer, or you can submit your loan application on Sundays because you do it yourself. But in a lot of organizations, both banks and MFIs, the nature of that relationship that we had before is also changing in order to increase the speed of loan disbursements and in order to save costs. And in some cases, that means we no longer have this direct one-to-one traditional personal relationship between loan officer and client, but a fully digital process where the client submits an application in the app, transfers all of the data electronically, speaks only to the call center on the phone, and then receives the money by transfer or maybe with a code that you can go to the ATM and cash in, etc. We've talked about some of these technologies in previous webinars, and some of you might even have implemented some of them. In this case, when you do that, and that's especially for the lower end micro, for the smallest micro loans, maybe for consumer lending, if you have this product, then there is no direct personal relationship anymore. But on the flip side, the good side is there is an increased speed. Let's go back to you guys. We would like to hear from you again with the Menti poll. If I hope you kept open the Menti page either on your phone or on the web browser. So go there again. And if you haven't, then go to menti.com and enter this code 98680233. And our question is this, whether you have implemented this in your institution. So do your clients have a direct relationship with a loan officer? 3 categories, yes, for all of our microloans, or yes, we do have a direct relationship, but only for the bigger microloans. Or no, we no longer have the personal direct relationship for the clients. So please go to Menti. It's a really interesting question. And I think it's interesting for you as well to get a sense of what others are doing as well as what you're doing yourself. So we'd really like to hear from you and see how the situation is on the ground. So far, most are replying that yes, we still have the traditional relationship and we have it for all types of loans. We have a few that have answered yes, but only for the upper size loans, which means this process has already started of reducing this relationship for the smallest loan sizes. And that's of course because that relationship is very expensive. Thank you very much for your participation. It's really interesting to hear from you. Please keep the page open. We'll come back to it soon. And let's go back to the presentation. So what we see is that this direct relationship with a loan officer or a staff member is becoming less of a possibility than it was before. And I think even though we saw not so many of you had implemented this yet, I think it's a trend and it's going to continue, and more organizations will implement some aspects of this in the future months and years. So you might call the call center, but you get a new person each time. And that might be a person who doesn't know who you are, who doesn't know what your situation is. How does that affect you as a client? Well, it can cause you to lose a sense of a relationship, the sense of it, the feeling that you have a relationship. And that makes your organization vulnerable to competition. It's actually one of the big risks when we go through the process of modernization and digitalization. Can customers continue to get this value and feeling of a relationship even without having the traditional personal relationship? That's a key question, which we will explore some tools for in the rest of the webinar. Bear in mind that this process is not only going on in microfinance institutions or in banks. A lot of these elements are being analyzed in a lot of the service industries, in airlines, travel agents, shopping, with Amazon, and all of them are trying to come up with answers to this. And we'll have some more examples also from other industries a little bit later in the webinar. Right now, I'd like to invite my colleague, Katie, to come on to present the next slide.
Good day, everybody. So a lot of things are changing. We see that relationship between loan officer and customer is changing. We see that new channels are developing. So today the question is in this environment of changes, how customers make their choices, how they decide which institutions they should select for to receive services that they would like to receive. And it's very important to point out that today, just the fact that you can provide access to finance or you can provide different type of financial services to customers is not enough, because it's not anymore an issue. Typically, on the majority of the markets, micro customers have an access to lending services or to financial services. Therefore, today they are looking for something more. They are not only looking to an access, but they are looking for a good, positive experience. They want to see a service provider who can ensure easy, let's say, a process to make sure that customer receives really a good experience. Yeah, let's look at in a bit more details what were factors based on which customers were making choices like previously, and it was speed. So what each and every micro customer wanted to see is that microfinance organization is capable to deliver lending services or other financial services really quickly. They wanted to make sure that their service provider was close to them, to their business location or their place of residence, and they wanted to see that the price that institutions are offering is reasonable. Yeah, these were key factors, and I don't want to say that these factors are not important today. These factors are still important today, but they won't make difference. So what makes difference today is a customer experience. How customers feel when they get services in your institutions, and how their customer journey looks like. And based on this, then they will already select specific service provider. It means that each and every microfinance institution today should go beyond a product features and go beyond just looking at the branch network or even the delivery channels. Yeah, it's very important to make sure that when customers are receiving lending services or any other financial services from you, they really feel satisfied and happy at the end of the process. I will again ask Asmus to come back and share with us some personal experiences when from receiving different services and how it looks like today.
Thanks, Katie. Yes, I wanted to give you some more examples of this from my personal experience from this summer. Not really from the microfinance industry, but I think you will recognize that a lot of these questions are repeating some of the challenges that you're facing. So I think it contributes to the discussion. Let me just move it forward. So this is about my experience from this summer. I was able to go on vacation with my family for the first time in a long time after the whole pandemic started, probably like a lot of you. That turned out to be quite a logistical challenge. I had to deal with public authorities for travel documentations, visas, rental cars, airlines, banks, etc. And I got to experience some of these different aspects of how customer service is changing in a very direct and practical way. And here I want to share with you some of these positive and negative experiences for me as a client, from the client's point of view. And I want to talk about three experiences. One was I had to get a document from the bank that I needed for the visas. The second was getting my flight ticket. And the third was getting a rental car. The first experience was with the bank. I went to the office to get a physical document because I needed it on paper. And I'm a long-term customer of this bank. And the person who's in front of me, the client advisor, I know her for probably more than 15 years, and she knows me. Nevertheless, she asks for my ID card. I give her the ID card that she can check who I am, even though we both know that she knows perfectly well who I am. Then she asked me, can you please pull down your face mask so I can check whether that's really you? And I pull down my face mask. She makes the first transaction. And then 10 minutes later, she's finished with that. She needs to make a second transaction. And she again asks, can you show me your ID card? Can you pull down your face mask so I can check that you're really you? And I've been sitting in front of her for the whole 15 minutes. So I'm obviously still the same person that I was 15 minutes ago. Why is that? Well, I think it was a clear organizational directive to say to our staff, there is no relationship. We don't recognize this. We are going for a fully standardized process. We want you to work like clockwork, like a factory. But how did that make me feel? It made me feel like I lost a relationship. We knew each other for 15 years and you're saying, I don't know who you are. I did get the document that I needed, but the whole process made me feel like I was a small, insignificant part of their machine and I was not important for them. The second experience I had with the airline. Booking a ticket is now easy and fast. In the past, you had to go to a travel agent and you had to wait for them to provide options, etc. Now it's online, it's automated, it's super fast and fairly cheap as well. Just until the day before traveling, I realized I had mixed up my wife's first and last names on the ticket. It happens, people make mistakes. It's probably not an uncommon mistake, but imagine the frustration that I had. I wanted to go back to the airline and ask them, is this going to be a problem? And can I change it? And I tried to ask this simple question, but I was under time pressure. I have to travel the next day. I was trying to check in and I was under stress. It took me 45 minutes to get through to someone. And once I reach a person, she could not promise to fix it. She said, just upload this document, that document, and I will forward it to the people who process it. I can't promise you anything. I can't guarantee anything. So there was a huge contrast between this very nice automated process and then on what happens when you fall through the cracks, when you have a problem that needs to be addressed. So here we go. But there were also positive sides, and I wanted to share those as well. In the bank, I also had to call the call center. But when I called their call center, they had implemented the functionality to just press a button to get a call back. So there was again a queue for the call center, but instead of sitting around and waiting, holding your phone to the ear, they offered the possibility, you press this button, we call you back. And they say, you don't lose your spot in the queue. We won't call you back tomorrow. We'll call you back when it's your turn and you don't have to put effort into waiting. You can sit here and prepare your webinar or whatever you need to do. That's not as good as getting through immediately and getting service immediately, but it does show awareness of the value of the customer's time and that there is an underlying customer KPI as well, in addition to the bank's own KPI for efficiency. So I thought that was a nice aspect and one that I had not seen before. So it's also a new development for them. Now for the rental car, I had to rent a car. You probably know that it's become super expensive to rent a car in the United States, especially since on the onset of the pandemic. They reduced the number of rental cars, then suddenly demand went up. Now they can't replace them, so it became crazy expensive. So I went to a new kind of company, a kind of upstart tech-oriented company, that a bit like Airbnb for cars. So you can rent, people can rent out their private cars on this website. So what happened was my booking was suddenly canceled by the private person who was renting out his car on this website 2 days before. So I was just about to travel. I was about to land in Washington and was told you don't have a car when you arrive. If you know the US a little bit, you know you need to have a car there. It's very difficult without it. So again, a lot of stress for me at the difficult time of traveling. But when I called the call center of the company that I rented it through, they immediately knew who I was. So they had my number in the system. They can see that it's me calling. They say, hello, Asmus. And they were able to see the messages that I had already written, what the host had written to me, etc. So they immediately knew what the issue was. They immediately went on to search for alternative cars for me. And since there were no alternative cars in the price range that I had booked, they immediately offered me a compensation to bring it up to the level where it was, I did not have to have a loss on booking a different car. So they offered me this basically cash compensation. It was clear that this would be a money-losing deal for them, but it also seemed to me like they were interested in building up a relationship. At least it felt like a relationship, even if we didn't have a personal relationship with any of their staff members. So that was a couple of examples of good and bad as these different technologies and efficiency improvements are being implemented across the different industries. And I think you might be able to recognize some of the challenges that you're working with in these examples as well. In the end, I solved all of the problems. I had a great trip. Now I will hand over to Katie. She will go deeper into this question from the technical point of view. What are these technical solutions that in some cases helped me over the summer? And that's what we call technology with a friendly face.
And before I go to presentation, I would like to ask you to go to a Menti again. So menti.com, if you remember. And answer the question, which of these communication channels do you use to interact with your customers? Is it phone, social networks, internet, mobile banking, messaging applications, web page, branch? You can select various channels, whichever you use. If you aren't yet in Menti, don't forget to use the code 9080680233. We already see some answers. Branch is still prevailing, but we see a lot of presence of call center, web page, social networks. So it's pretty diverse, even though branch remains to be the key, let's say, contact point for the clients. We see more and more, let's say, phone interaction, more and more social networking interaction. And I think this trend will continue. Thank you for these answers. Obviously, the more delivery channels are developed, and it's a fact that all microfinance institutions are really moving now to developing and going into the digitalization, we will see that interaction from a branch will move to a digital channels. And as you could see from the examples that Asmus brought, it will become even more and more important to create the sense of relationship between institution and the customer. And so the question is how this relationship or feeling of relationship could be created using certain technologies. And here I would like to go back to our presentation and introduce to you different tools that you could use. Namely, I would like to talk about call center software, which should enable you to make sure that clients really feel that they are well known by the person who is interacting with them. What you need for that? First of all, what is needed, and we saw, you use different channels. You use phone, you use social network, you use web page. And it is important that irrespective which channel is used by the client, you ensure that communication doesn't breach when you switch client from one channel to another channel. For example, if client starts communicating with you through social network and asks some questions on Facebook or sends some message through Messenger, irrespective of channel he uses. But then he got interested in your services and wants to interact with an operator, and you offer him to call a call center. It is very important that when client dials and talks to an operator, he doesn't have to start the discussion from the scratch and from zero, and that your operator already knows what was the interaction with the customer, what were his questions, and at which stage the communication stopped in the previous channel. Why it is important? Because client understands that even though I started communications through different channel, well, these people already know who I am and what I need. And for this, what you need omni-channel integration of all communication channels that you use into one platform. And your call center, let's say software, should allow this. This is very important. Second aspect, what I would like to mention, and I go back to Asmus' example, nobody likes to wait, irrespective whether it's waiting in a branch or waiting on a phone. But I would say that when the client has to wait on phone, it's even more annoying, because in a branch, even if the line is big, you know how many people stand in front of you, and to a certain extent, you can guess how long you will be waiting there. And at least you see what's happening, how customers are served, and you create certain impressions. But when you're waiting over phone, you really have no idea how long it will last. And it's very important that clients do not have to wait for too long. And how you can ensure this? You can ensure this through digital receptionist. It's again a functionality of good call center software, which would allow you to do two things. One, Asmus has already discussed in his case, you can offer client callback. So automatically asks a question whether he would like to receive a callback. And if client selects yes, in this case, call center operator calls back to a client as soon as she has time. Another thing what you could do, you could again through automatic questions, ask clients what is exactly he needs. And depending on the answer, there are two options. Either you provide automatic answers, or you direct the client to an employee who could solve his problem in a faster way. And third functionality or technologies that I would like to mention, it's CRM. In many financial institutions, we already have CRM software, but it's also very important that CRM software is integrated in the call center solution. Why it's so important? Because we have already discussed it, yeah? When a client comes to you, or when client calls you, they want to feel that you know who they are, what type of customer they are, and what type of services they need, or what type of problems typically they have. And this should be felt from the first minute. How you can ensure it? If CRM is integrated into call center solution, when customer calls, call center operator that right away knows who is the customer. How? Because you should have his phone number in your CRM, and right away operator can pick up the phone and address customer with the name. This is one thing. Another thing, if CRM is integrated, it will allow your employees to see what was the interaction, what was the history of interaction with the customer, what type of troubles or issues customer encountered, and which solutions your employees have already offered. Why it is so important? Because if customer is coming back with the same problem, your operator won't offer the solution which was already offered and didn't work. So operator knows that how to continue the interaction and communication with the customer, and what type of solutions should be offered this time. Sometimes customers do not call us just because of problems, but they want to know something about products that they use or services that they use. And again, if operator has an access to CRM, they know this information and they can easily provide answers to a customer. So just to summarize, there are 3 key things that you need to make sure your call center functionality allows. First is omni-channel integration of all communication channels that you use. Second one is digital receptionists that make sure that customers are served timely and conveniently. And third, this is a CRM integration, which allows your call center operator from the first minute to know who is calling and offer a tailored solution to a client. I would like again to ask you to go to Menti, and it will be interesting to see how well developed already your call center are and which technologies you use. And first questions that we would like to ask you, whether you already have an omni-channel integration and whether your call center operators have one platform through which they can see, through which they can interact, irrespective to the channel that the client is using. With this, situation is different. Half of the participants has already omni-channel integration, which is really a good functionality, and others we see that partially or not yet, but obviously this is something where we need to go and develop. Let me go to another question and ask you to answer. Another situation is changing slightly. We see more and more institutions not yet having this omni-channel integration, but again, I would repeat that it is very important to make sure you have really smooth interaction with customers. And let us go to another question. And here we would like to ask you, if your call center employees see what has been discussed with the customer until now, if they can see the history of interaction with the customer, and if they can see what solutions were offered. So it's interesting whether you have CRM integration into call center. So we see it's really good. We see already in number of cases that yes, they can do this. And very few participants who say that no, it's not yet available, and I'm sure it's very interesting for everybody to see that this is something which is entering microfinance industry, call centers, and this is something important to be developed, and majority of participants still already have it. Great. And let's go to again, our presentation, and here I would like to ask Asmus to come back and continue presentation.
Hi, Katie. I think the next step is in the presentation. Don't you want to do that yourself, and then I take over?
Okay, let me see. I have a technical issue. Carmen, can you help me to move to the next slide? Good. Let me briefly also touch, when you implement new technologies, it's very important to take into consideration a few aspects. How these technologies are implemented. Asmus started our presentation with the fact that a lot of times when we talk about processes and when we talk about changes in the institutions, we are coming out from the interest of institution because we want to become more efficient. But sometimes we forget what is the interest of the customer. And it is very important that irrespective to which technology you implement or which delivery channel you introduce, it is important that you put customer at the center and you make sure that the channel is really user-friendly and convenient for the customer to use. So make sure that you emphasize on the benefit of this channel. For example, if you introduce ATM, or if you introduce self-service loans, or if you introduce a digital lending process, whatever, mobile banking, internet banking, doesn't matter. Make sure customers understand why it's beneficial for them to use this or that channel. What is additional added values that they get from using ATM instead of going to branch? Yeah? Why it's cool? Because ATM provides 24-hour access to the cash that the customer is keeping with you. Or when we are talking about digitalization of lending services, it's better to use digital channels, but not branch, because again, customer can apply for a loan anytime when he wants without coming to a branch. And it's very important that you explain this to a customer, because we started presentation with the fact that customers are used to the face-to-face communication with loan officers. Sometimes they are very tied to loan officers. And it's very important that we explain to them that if they use digital channels, they will get same quality service, but they will get additional benefit because they won't spend time in traveling to us, and they can choose times that is convenient for them to apply for the loan. Yeah. Second aspect, which is also very important when you are introducing new technologies or channels, it's nudging customers and not forcing to use this or that channel. And what I mean, for example, I can bring an example of one institution which, after introducing ATMs and self-service zone, what they did, they just forbid customers to go to branches for cash or for the transactions that could be done through self-service centers. And this caused a very big dissatisfaction in the customers because they were not used to these channels. They didn't know how technologies work, and basically they lost because of that a lot of customers. So what is important? How you should do that? Okay, you think ATM is better, more convenient, but customers are not used to technologies. So make sure you give them incentive. For example, make cash withdrawal from ATM cheaper than cash withdrawal from the branch. Or when we are talking, again, going back to lending process, when we are making payments, yeah, instead of making payment to a branch, somehow incentivize customers to make payments through self-service zones. But again, provide additional incentives for them, but don't force them to do it. And the last point that I want to mention, it's a real-time support. What does it mean? To make sure customers get used and feel convenient with the technologies, make sure your employees, either call center employees or in the branch, they are ready to support customers when they need. For example, when customer comes to an ATM of the branch, to a self-service area of the branch, make sure there is one employee, at least in the beginning of introducing this new technology, yeah, who is always ready to support customers to use ATMs, who can teach customers how to use ATM, or at least install a phone in the self-service area, which could be picked up anytime, and customer right away calls into the call center, and there is somebody, an operator, who can assist the customer to use again the technology. The same refers to the digital applications that you, on your web page, make sure that there is always a chat box available through which customer can text your operator and receive real-time support. This will really incentivize your customers to use the technologies more and more. And after a certain period of time, you will see that you won't need to put too much efforts and energy in incentivizing customers to use these new channels, because they will really feel benefits themselves. And it will bring the results that usage of your digital channel is increasing, and your branch workload is decreasing in that. Good, and let's now go again to some practical examples.
Yes, hi again, Katie. I wanted to follow up on this question with the human touch. We've seen the relationship changing from a direct connection, client to client advisor or client to loan officer, personal relationship. And now with self-service and sometimes not even having loan officers with their own dedicated loan portfolios, this is changing. So it's changing because computers, technology, self-service take over more responsibilities, but we still need some people. And I wanted to hear your ideas. When is it that we really need a person, a human, to talk to?
Yeah, absolutely. I mean, technologies doesn't mean that need for people will disappear. And let me again bring some practical examples. I would use one banking example and one non-banking example, and somehow based on my personal experience, I could say that other industries have developed faster in this direction. And here is my example. I remember last time I wanted to open deposit with the bank through internet banking. This functionality was available in internet banking, but I wanted to change one small feature of the deposit. I couldn't do it because I didn't know how to do it through internet banking. So I needed somebody. Yeah, I picked up a phone and called into the call center of the bank. So again, when I couldn't do the transaction myself, I really needed employee support, and that's why I had to ask call center for support. And another example, again, non-banking, everybody knows Amazon, I guess. I ordered a product from the Amazon. It was delivered, but I got the wrong size of the product. Again, what to do? I mean, there is even not a location where I could go, yeah, which is not similar for the bank. You can at least go somewhere. So I again needed to text to a support center of the Amazon. So just to summarize, yeah, I'm a person who likes to do things in a distant mode, but still it doesn't mean that I can always do it on my own. I need sometimes support if I face a problem and if I can't do the transaction on my own.
Okay, so it's really about those type of situations when there's a specific problem.
Yeah.
It's not about the day-to-day service anymore, but when you have a particular problem.
Yeah, absolutely.
And what is it that they should do then, the person that you talk to, when we use this valuable resource which is the human being? What do you want them to do?
What I want them to do, again, let me go back to my examples and I will tell you what type of solutions were provided there. In case of the bank, I told you I called to a call center and I asked how to solve the issue. Call center told me that basically the features that I want to be changed in for the deposit product is available. So I could get this solution. But the answer was that to get this, I need to go to a bank. So I couldn't do it through a digital channel. In case of Amazon, what has happened exactly after not more than 15 minutes of communication really explains the situation. What Amazon did, Amazon sent me a new product and they even reimbursed me the sums that I paid for the product, because of the, let's say, difficulties that I experienced with the product delivery, yeah? So in first case, let's say my question was answered, but I couldn't finalize the transaction. I didn't get a solution. In second, I got a solution. And it's very important that for me, yeah, if I'm told that I can do something digitally, remotely, I want to do it. And I don't want to spend time going to a bank and like interacting with too many people to solve my problem. If you offer me to call call center when I have a problems, and call center should be able to solve my problems. This is my expectation, at least.
So if I turn it around from and look at it from the MFI or the bank perspective, when we talk, when we use a human being, the expensive resource, we should then also make sure that they're the ones that are empowered to resolve the situation. It reminds me of the example I had waiting 45 minutes to speak to an airline employee, and then they say, I don't know anything about it. Why don't you send us an email and send me the documents, and I'll give it to a decision maker instead.
Yes.
And that was also, like your example, frustrating, because we should use these employees in order to solve those problems for the customers.
Absolutely.
So what is the implication of that in terms of the type of people we need for the call center? Is it still the same that we've been using in the call center so far?
I think this is really a very important question, because what type of people we see in call center? Typically, these are people who can nicely interact, be kind and nice to customers, and redirect customers to other people, other employees, and really answer simple questions. But and typically these are employees who are really low paid. And when we are talking about providing solutions to customers, I don't think that call center employees, the profile of call center employees that we see right now in microfinance industry is really fitting, because I would expect there to be somebody probably minimum equal to a front officer in the branch who is able to perform transactions on its own. Minimum. Yeah, I would even say maybe a bit higher qualification, because in call center, it's not easy to interact with the supervisor in the same smooth manner as it is possible in the branch. So it should be pretty high profile and higher paid employee.
Okay, so it also gets a bit more expensive for
Yes.
the institution in this way to use the human capacity. Okay, thanks a lot for this, Katie. Very interesting insights. And now I'd like to take the next step and look at what is then the outcome of this process of empowering employees. So, but before we get started with this, I'd actually like to go back one more time to Menti, if you've kept Menti open. So if you could go again to your menti.com page, and we want to ask the question if your call center employees are actually authorized and empowered to solve customer issues on their own. And I think this is a gradual process. For some, it will be fully there. The call center people can independently solve all issues. You might have implemented that they have some autonomy to solve some things, or they might be able to fix just small technical things, or they're really like the traditional call center, the old-fashioned call center, in a way that they really pick up the phone and transfer it to the relevant decision maker or problem solver, etc. So if you didn't leave it open, please do go to menti.com. We would like to see what your experience is and to hear from you. So as we can see here, it looks like in most organizations, the process has started to move away from the traditional call center who really just picks up the phone. And you've started giving them some technical functions that they can already solve by themselves as a first line of defense, if you wish. And there are a few organizations that have already started to give them more and more autonomy and to solve customer problems by themselves. Great, thank you very much. Let's go back to the presentation, because we talk about empowering employees to do what? It is, for example, to give compensation, like the compensation Kitty received from Amazon, or the compensation that I was offered by the rental car company. And it's simply the freedom to decide what is the workout strategy for this customer. This customer has a problem. I will think about the problem and I will design a solution, figure out a solution that fits the problem that this customer has. So what is the impact of that? Well, I think the first impact is actually employee satisfaction. It's not just keeping your customers happy, but it's potentially a more interesting job than just picking up the phone and transferring the call. It's a more challenging job for sure. But it's also satisfying that you don't only have to listen to people complaining and taking notes, but when people complain to you, you can solve their problem and let them leave you as a happy customer. So that's a plus for employee satisfaction. It's a more interesting job. The second one is, of course, customer satisfaction, which you might call, we have the, Katie will talk about that in a minute, the NPS, the Net Promoter Score that you might get out of the customer actually saying, yes, I would recommend this organization to my friends, even though I had a negative experience with it. And then the third question is, what about profitability? This seems to cost money, this compensation. And I had mentioned that this compensation I received for the rental car was probably more than the profit that the company had on this interaction. So let's have a look at how that affects profitability. And let's think about what is customer profitability. For customer profitability, let's look at what's the whole lifetime of the customer together with you. Not how old does he get, but how long is he with your organization. And throughout that lifetime, you make different transactions with him. For a microfinance institution, it's probably he took a loan, he took another loan, he took another loan. So each loan is a kind of one transaction. On each loan, you earn a little bit of money with that client. For a bank, it might also be money transfers and other kind of transactions. So you have a certain number of transactions throughout the lifetime, from the point when you acquire this client and bring him in until the client, the point where the client maybe retires or leaves and you lose the client to another organization. So that's your income side, but you also have cost. And it costs something to acquire a client. And that's what we have, the blue bar here, which sort of eats up the income from the first few transactions because it costs you something. Might be your marketing cost divided by the number of clients acquired in that month. It might be just the cost of having a loan officer going to the market, distributing leaflets and getting new clients in. So you have that upfront cost to get a client. But then all that covers the income you get from the first few transactions, but then all the rest of it is in a way your profit from this client. But then what happens if you lose the client after a while? Then you don't get this income. And then you don't get this profit either. Then you have a lost opportunity and you still have a profit in this case, but it's a much smaller profit than you thought it would be. And if we lose the customer too early in the relationship, then the lost opportunity is bigger and we even face a real loss on the client. It cost us more to acquire him than we earned from the few transactions that we managed to do with him. So you can see how that affects the whole discussion around offering the customer a compensation. He might have a problem and he would leave as a happy customer if you offer him this compensation, which might indeed annul the profit you would get from this transaction. Maybe you don't have a profit from this transaction. Maybe you have a loss from this transaction. But the outcome of it could be that you maximize the customer lifetime with you. And then over the whole lifetime of the customer, you will as an organization remain profitable, even though you take a loss on this individual transaction. And that's a kind of long-term perspective that you can take in order to maximize your customer happiness, so to speak. Good. I promised you that Katie would come back and talk about ways of understanding whether the customer is happy or not. So one of them was this Net Promoter Score that was mentioned. So if Katie, if you will join again.
And okay, we talk a lot about customer satisfaction and customer happiness, but the question is how to measure. How to measure whether customers are really satisfied with us or not. And there are several methods that you could use for this, and we will just mention a couple of them, and afterwards I will try to provide some examples in which situation this or that method could be used. The first is measuring customer effort score. What does it mean? It means that we try to understand how customers, how much efforts customers spend while they try to receive our products and services, but we try to ask customers how they feel about that. Another method that could be used is customer satisfaction survey. I think this is very simple and majority of you use it, when we just simply ask customers whether they are really satisfied with our services or not. The third is Net Promoter Score. Asmus has already mentioned it, and I would say this is one of the really good measures because it tells us whether customer is ready to recommend your institution to his friends, family, peers, and etc. And it's really good because it really shows whether customer was satisfied with your product and services. Sometimes customer satisfaction survey tells us that customers are happy, but it doesn't guarantee that they will recommend you to their friends. While Net Promoter Score really tells you how satisfied is customer and whether he really thinks that you are worth recommending to others. And if your Net Promoter Score is high, it means that you should be waiting for a new flow of customers from your existing satisfied clients. The first, it's an analysis of customer journey. What does it mean? It means that you look at the processes from customer perspective. So typically when we look at our processes, we really try to measure turnaround time, but we focus on let's say, aspects such as how much time our employees spend on the process and how many employees are involved. But it's a bit different when you look from customer perspective and you try to understand how the process looks like for the customer. The next is qualitative research, when you just try to go into a deeper interview with a small group of customers and understand their feedback on your products and services. You can use qualitative research and really deep interviews when you try to provide and create new products and services, or you try to improve features or whatever design of your products and services, and you really want to understand how what are customers' feelings and feedback about this or that aspect. And the last one, again, I think a lot of institutions use it. It's a churn rate, which basically tells you how much customers you are losing within a certain period of time. But why I'm mentioning this measure as a last method, because it's a bit late. Like if your customers are already lost, you can't do anything about that. But the same doesn't refer to customer effort score or customer satisfaction survey or Net Promoter Score, because if you see that customers give a low rating to you, then you still have possibility to react. Like if you ask customers the level of satisfaction and he says, I'm not satisfied, then you can react and offer something different to the customer. Let's now have a look at customer journey and understand how to analyze customer journey and which methods you can use at different stage of customer journey in your institution. Here is an example of one of my microfinance institutions. This is a real example from a Star Bank, let's call it like that. You see how many interactions has customer with you before he gets a loan. First, it starts with the research of the conditions of your products, and then it continues with filling in digital application on your web page, after which customer gets a call from call center, which tries to collect additional information from the customer to assess whether the customer is eligible for loan or no. And then there is another call when call center employee informs customer about the decision. After a customer is informed about the decision, customer is asked to come to a branch to open an account, then to sign a loan agreement, and then to take cash in the end, to take the loan. And if you look at the journey, you see that throughout the journey, customer had basically 6 interactions, 1 interaction on web, but then 5 interactions with different employees, 2 from call center and 3 in the branch. So now look at this process again from customer perspective and how you would feel. Would you like to have so many interactions when you are just applying for 1 simple loan? And try to consider how you could simplify this process for the customer. Now let's move to other methods. For example, when you ask customers to fill in digital application, and for many microfinance institutions, still it's new, let's say, feature, which was developed during like recent year maybe, and ask customer effort score, or question would sound like that. On a scale of 1 to 5, how easy was it to fill out the application? And try to really analyze customer answer. If customer says that like it was really difficult or it wasn't easy, then you need to see why. Look at the length of the application, how many questions you are asking client, and how these questions are formulated. Are they really easy for the customer to understand? This is one method. Let's move to another method, and let's now try to understand customer satisfaction. And again, for example, after interaction with the call center, ask the customer, how would he rate the interaction with your employee? If the customer gives low rating, it doesn't necessarily mean that call center employee didn't know how to talk with the customer or he was rude or something like that. But it may mean that your instructions to call center and the questions that he has to ask to a customer are too many. And maybe you ask a call center employee to gather too many information, which really annoys the client. So go deeper into that. Again, customer satisfaction score, you can ask on different stages. Every time customer interacts with your employees, you can ask customers this question. And last, it's a last stage of customer journey. When customer really gets money, ask customers how they would rate, how likely it is that they will recommend your services to his friends, family, and etc. Again, if the rating is low, it means that, even though if customer answers that he was satisfied, it means that customer is not really happy about your product and service, and he's not going to recommend you. This really tells you whether customer is really happy with the service you delivered, if his experience was really good or not. Let's now move to some KPIs that we set inside the institution and towards employees. It is also very important that besides using certain tools to measure customer happiness, it's very important that we really set in our institutional goals customer satisfaction KPIs. Because typically, yes, we measure whether customers are happy or not, but in our institutional goals, we typically set the target for loan portfolio growth, but we don't set a target for customer satisfaction. And when these, let's say, KPIs are set on institutional levels, then we can integrate them into the employee KPIs. Let's have a look at the example. For example, let's compare efficiency KPIs to customer satisfaction KPIs. We typically, for call center, we typically set a KPI like number of customer interaction. If customer satisfaction KPI for call center could look like number of customer issues resolved. Not really interactions, but how many issues call center managed to resolve. Then we efficiency KPIs that we set for call center or any other employee could be number of products sold. Instead, we could also measure, not instead, but additionally, we could also measure, for example, net promoter score. Another example, for example, number of new clients. We can additionally measure also churn rate. Of course, new clients are important, but it's also very important that we are able to keep our existing clients. So again, keep in mind that unless we really integrate customer, let's say, happiness KPIs in employee KPIs, it will be difficult to achieve good results. Also, when we are talking about like process efficiency KPIs, it's also important to set KPIs from customer perspective. And what do I mean? From MFI or financial institution or bank perspective, for example, when we look at the efficiency of lending cycle, what we try to measure time from application to yes. Because many institutions consider that after yes, then it depends on the customer, how quick he is to come and to take the loan. But it's not the reality. What matters for the customer, it's not from time to yes, but it's time to money, because he applied for the money. And sometimes after we give answer to a customer, we introduce a lot of additional, let's say, requirements, documentation, formalization of collateral or whatever, or in our customer journey, I showed you that he has to come to a bank and to interact with 3 different employees to get the money in the end, yeah? And which is not convenient for the customer and it takes a lot of time. So instead of measuring time to yes, again, from your perspective, measure time to money, which is really important for the client. And before we go to the summary of today's webinar, I would like to ask you to go to Menti for the last time for today and answer the question, and probably it's interesting also for you, which of the discussed customer happiness KPIs do you actively use to measure the performance of your institution? Do you use the Net Promoter Score? Do you use Customer Effort Score, Customer Satisfaction Score, Churn Rate, or none of these? We see that Customer Satisfaction Score prevails right now. If you have left the Menti page, go again to the menti.com. You see the password in the top of the slide, 98680233, and you can provide answers afterwards. Again, we see a number of institutions have already answered, and customer satisfaction is the top. This is really good that you measure, but again, I want to mention that customer may be satisfied. Sometimes when they answer that they are satisfied, yes, they are satisfied with concrete interactions. They are just satisfied that in the end they got the money, but it doesn't mean that they had really good experience, which they will recommend to their peers and friends. That's why it's really important to use some other KPIs as well, for example, as Net Promoter Score. Good, and we see that some institutions really use it. Thank you for your answers, and I would like to invite Asmus again and ask him to summarize today's webinar.
Thank you, Katie. Yes, we're coming to the end of the webinar, at least the presentation part of it. And as Carmen mentioned, afterwards we will have a Q&A session. I can see there are already some questions that have come in, and please go ahead and click the Q&A button and ask your questions there. But first, a brief summary of what we talked about. So general issues, there is a tendency towards losing the personal one-to-one relationship between client and employee, and that has advantages, financial efficiency, etc., but it also has drawbacks that we need to think about how we can counter these drawbacks so that we get maybe a sense of virtual relationship with the customer instead. There is a risk that this efficiency that we are all striving towards, it decreases the quality of service. We have to be mindful of it, understanding there's not only the bank's KPI, there's also the customer KPI behind it. And we should always be looking at customer experience. How does this all feel for the customer? Does it meet his needs? It's not enough to just deliver your product. You have to deliver it in a way that the customer is actually happy with the experience. About technology, a lot of us are implementing new technologies. Here, don't force it down the customer's throat. In most cases, the technology is actually a better solution for most of the customers, but introduce it to them in a way that you don't force them to use the new channels, but you nudge them, you gently direct them towards the new technology, and they will probably all end up with the new technology anyway, but be happier in the process. And look for deploying technologies with a friendly face, as we say. So the kind of technologies that help you to recreate the sense of personal relationship and that take into account the customer KPI, like the CRM systems, the omni-channel integration, etc. For employees, think about who the employees are that you want to have in your call center. Your call center is becoming the most important part of your customer service experience in many cases. So make sure that you have the right people in there that are smart and well-trained and proactive and ready to help the customers. And then also empower them, give them the tools to resolve customer issues independently. And for the customers, think about the company KPI you have. What is it the company is trying to achieve? Is it a certain return on equity, cost-income ratio, profit, etc.? And take one of your customer KPIs and make that part of your customer KPI as well. We have to reach X% customer satisfaction or net promoter score for our clients, because that helps to focus the attention of the customer towards this issue. And think about the lifetime customer value, and not only very narrowly, did I make a profit on this particular transaction or not? You want the customer to stay with you for a long time, and that's how you create a sustainable institution. So that's a brief summary of what we've talked about so far. I would then hand over to Carmen, who will walk us through the Q&A section.
Thank you, Asmus. Thank you, Katie. So the Q&A session, we already have some questions in the Q&A. Thank you for those questions. We'd like to invite you to ask maybe a few more. Maybe you can come up with a few more that are there. Click the Q&A button, write a question. You can actually choose if you want to remain anonymous, or if you would like to put your name to that question. So the first question we have is around the KPIs. So I'll leave you two to choose who wants to take it. Maybe you both have something interesting to add to it. You mentioned quite a number of KPIs. If you picked only one, which one would it be of the selection?
I think I've mentioned several times, I would prefer a Net Promoter Score. Because again, I mean, it really tells you what was customer experience. And if he's really satisfied with your product, then he's going to recommend you to his friends. But if he's just happy that he got money, it doesn't mean that he will recommend you to his friends. Yeah. And what you want in the end, I mean, how you measure in the end whether your customers are happy or not. The best measure is if they bring their friends and family to your institution, then they are really happy with you. If they aren't going to bring anybody to you, it means they are just happy that they got money, but they are not really having a positive impression about you. That's why I prefer to use Net Promoter Score, because I think it's more objective measurement.
Okay, thank you. I'm sorry. And then we have a question. How is the CRM useful for interaction with the customers? How can that then provide the connection?
So the CRM, or customer relationship management system, can help you in the sense that it tracks all of the interactions that you have with the customer. So it's where you can see what business do you have with the customer, and that the customer wrote to you 5 times and complained about issue A, B, and C, that he has called 4 times over the last week, that he's been trying to reach you, etc. So, and ideally, you should be able to see also what are the answers that we gave him in the last couple of times that we talked to him. And that can be incredibly helpful because then you don't start from zero when you start resolving a problem for the customer. If the customer has to, every time he calls you, he has to explain the whole story from the beginning, and it takes 20 minutes to explain it and get someone to actually understand it, that's incredibly frustrating for the customer, who's maybe already upset because of some problem that he has. So it means simply that your employee can go straight to the point and pick up where somebody else actually left off. And maybe also understand if we as an organization made a mistake and recommended the wrong path before, then you can correct it. So it really, I think it's really a powerful tool for providing a good customer service, especially in these situations when somebody has a problem that needs fixing.
Mm-hmm.
Kitty, something to add?
No.
Okay, thank you. So the next question is, how do you get the NPS from the customers? Would you recommend only digital or even in branches?
Mm-hmm. You can do it even in branches as well, but irrespective whether it's an NPL or customer satisfaction score, what is very important, like, don't task loan officers like after they finalize service, can you score and loan officers and looking at the customer, what customer is marking, because this will really destroy everything and you will lose objectivity of the customer. But for example, after the interaction is done, loan officer or front officer, whoever you have in the branch, can ask customers, there is in the corner a tablet, and can you just rate or let us know whether you are satisfied or whether you are going to recommend us to your friends and whoever. Yeah, do this way, but you can do it, of course, in the branch as well. Just make sure it's not supervised by your employees, the process, yeah, so that you receive objective answer from the customer.
I think it depends also simply what tools and technologies do you have available in your organization. If you actually have an app and all of your customers have the app, and you can quickly push to the app every time the customer has taken a loan, the question, click here, will you recommend us, or how likely are you to recommend us to somebody else? Then that's great, and then that's probably the easiest one. If you don't have these tools, well, you can think about having the call center do it, because the call center, yes, it is your employees, but they're in a way neutral in relation to the branch. It's not their fault if something went wrong in the branch, so they might be perceived as a more neutral person. The risk is always that the employee can influence it. For example, in the example Katie gave, there's a tablet in the corner where you can click how happy you were. But of course, the risk is that the client advisor might only send customers over to the tablet if she thinks they were happy with the service, and then you get a kind of selection bias, and it looks like people are more happy than they really are. So keep these aspects in mind also when you design your solutions, your own solutions for how to collect this Net Promoter Score.
Sure. Okay, thank you. So we have a next question, a little bit longer. So microfinance is all about engagement, relationship, and connectivity with customers and clients. Absolutely, yes to that. MFI staff, especially loan officers, always scared that if clients are not being given follow-up physically, the loan may get delinquent. How can we work with them to get them out from that scare feeling? What do you suggest?
First of all, completely agree. This is how microfinance started, and it's even now right that. But things are changing, and we see that it's even more and more important to get to stay sustainable and efficient. It's very important that part of the microfinance is moving to digital channels. Not fully, but loan officer relationship will disappear. How to make sure loan officers are not scared? And for this, the first question is to be answered. Are loan officers still people who should stay responsible for customers who will receive, let's say, products and services through digital channels? Because, of course, loan officers don't want to be responsible for customers whom they haven't analyzed, whom they haven't assessed. And the question is, should you keep them responsible for that or not? Or you should build up a different structures to deal with these customers, yeah? And it's a question of loan collection and recovery management in the end. I think this is very important question. Another question is how you make sure that loan officers are not scared to, let's say, incentivize their customers to use customers in their portfolio to use automated loans, like a bit simplified, goes through simplified process, but this is not typically a challenge. A challenge is when you ask loan officers to be responsible for a customer whom they have not analyzed and whom they haven't brought. And this is not a question of really trying to convince loan officers to work with these customers, but it's a question, do you want to put loan officers responsible for the arrears or delinquency of these customers? It's a different point to keep them responsible for providing services to these customers when they need, but do you want them to punish, or let's say typically this is reflected in the bonuses of loan officers, yeah? Do you want in the bonuses of loan officers to keep the punishment for delinquencies of this type of customers? Probably this is a question that institutions need to answer. And then loan officers won't be scared. If you don't punish them for, let's say, delinquencies, and if this won't be reflected in their incentive scheme, they won't be against.
It's a very interesting question. It's a complex question, I think, because you have, on the one hand, you have the question of change management, which is what I think Ketty, in a way, explained. How can we manage this change and convince our employees, for example, through these structural changes? Either you don't penalize a loan officer through the bonus system, or you maybe even don't give this problem to the loan officer, but have somebody else, like a problem loan officer, handle it. But the other part of the question, I think, is, are the loan officers right? Will clients stop paying if you don't have this relationship? That's a good question, because indeed, part of the value of the relationship, the personal relationship, might be that the client values the relationship with the loan officer and therefore makes an extra effort to pay the loan. And I think that makes relevant the other things that we've talked about here in the webinar, and we could, of course, maybe on a different occasion go into even more detail with it. But how do we make sure that there is a feeling of a relationship, that the customer values the relationship with your organization and therefore says, I'm a customer of your organization, and it's valuable for me to be your customer, and I will do everything I can to stay on time with my loan because I want to remain your customer, and you're a good customer. And there are, of course, things one can think about having sort of bonus schemes for clients, that if you're a customer in good standing, you get a gold star or whatever it is that you get for, or some kind of reward for being in good standing with the institution. And through this type of mechanisms, I think you can also incentivize people to continue paying, even if there's nobody running around and reminding them all the time.
Thank you very much, both of you. Then I'd like to remind you, there isn't so many questions currently, so if you have more questions, please do send them through the Q&A function. The button in the bottom of your screen, Q&A, and you can write it either anonymously or stating your name as well. The next question we have is around That's a, well, similar topic, still around clients, of course. And what about clients who are not used to using technology? Some of the older generation, for example, do we not need to keep the direct relationship alive for them?
Should I, Katie? Good question. So it's definitely, there's some customers for whom this transition is easier than other customers. That's very clear. And we often get this kind of questions. I would say, first of all, you may be underestimating how tech literate your customers are. At least we found that in some cases working with our customers that are microfinance institutions, that when we really start analyzing, we take a sample of clients, we go to them, we say, show me your mobile phone and what do you have on it? Yes, they don't have the latest iPhone 13 or whatever it is, but a lot of them did have smartphones. They're old, they're used smartphones, the screen is cracked sometimes, but it's a smartphone in a lot of cases. And then when we look at what are the apps on there, we found people with payment apps and banking apps. And so we were surprised, and the MFI was surprised in this case, that the customer is more tech literate than we thought. That doesn't negate your question, of course. There are some customers for whom it's more difficult than others. And think about how you do the transition. Start the transition with the customers for whom it's easy, and it's a piece of cake for the first 75% of your customers to move them over to the new technologies. And then for the remaining 25%, think about how can we design this technology in a way that it is really, I would say, child's play, to use our technology and to use our app. And the reason why I say child's play, because that's actually how the app designers think. They think in terms of games and gaming technology. How do we make this really as easy as just tapping like this, make it very intuitive, and see how you can make it less complex. The good fintech solutions that you see on the market, they win typically because they are super easy to use. It's not because the customer has to go through a heavy process in order to save a couple of bucks. That's not a winning proposition in the market. The winning proposition is the one who manages to boil down the product to something that's really, really simple and easy to interact with. And I think this can be done. Sometimes it means having a bigger font sometimes it means using colors or using pictures. Some of your clients, if you're working with the smallest of the smallest microloans, maybe some of your clients don't read very well. And so asking them to read some kind of legal text on the mobile phone is a no-go. But then sometimes you are able to use pictures or pictograms to help them to quickly get to where they need to be in the application. So that's at least a couple of thoughts about how to solve the problem.
I would just add one practical approach from one of the microfinance institutions to this aspect. Basically, it was not more about ability of microfinance their clients to use technologies, but it was about they're striving for relationship. Like institution felt that they are serving mostly microfinance customers in villages for whom it's so important to have the interaction with somebody from microfinance institution. It's just so they feel so, let's say, valued if loan officer still appears in the village and interacts with them. And the solutions that this, let's say, microfinance institution found was that basically they have digitalized the lending process and automated the majority of it, but they still kept small number of relationship officers in this case, who would still go to the region, interact with the client, like offer, yes, sometimes introduce new services, try to cross-sell. But the main idea of retaining these employees was keeping this human touch with the customer, just sometimes appearing in the villages, visiting customers, make sure that they feel valued and remembered by the institution. But as I mentioned, the majority of the process was automatized and digitalized. Carmen, your microphone is off.
Thank you very much for your answers. And this is also the end of the questions we've received. I'd like to say thank you to our presenters here for the presentation, for your input, for answering the questions. I'd like to say thank you to our participants for your questions, for being here, for your interest, for your support. Also, I'd like to, of course, thank Triple Jump Advisory Services, who have made today possible at all. And I have two more small things. We've had a few questions around the recording and the presentation. We will send those to you in an email with a link where you can download the recording of today fully and the PowerPoint that we've showed you today. So you have all the possibility to come back to it, including the Q&A session here at the end. So you can also share that with some colleagues who were unable to make it today or didn't know about today. So you're free to share that rather widely, if you like, and come back to it. Also, you will get the PowerPoint presentation. I did say that. So the survey as well, when you now leave, you will have a little window popping up asking you to fill in a quick survey. It shouldn't take very long. It's a few minutes to let us know how we did today, how it was today. Was it interesting? Was it not interesting? What did you want more of? And what other topics are going to be of interest in future events like this one? So we can tailor maybe one just to exactly what you are interested in. So thank you very much in advance. Take care and have a lovely rest of your day.
Thanks, everyone. Have a nice day.
Thank you.
Goodbye.
Bye-bye.